we have DK Jain, Chief Executive Officer at India Pesticides, with us. Mr. Jain, good morning. Thank you so much for joining in. A view on potential in demand going forward. We've been looking at the year gone by. It's not been the most encouraging, at least as far as Q4 is concerned. But do you think that we can start seeing positive traction going in?
Yes, sir. Last year it has been a very challenging year for all the agrochemical industry. But this year now the things are getting better, and we feel that in 1 or 2 quarters it should improve a lot. Last year it has been really a very challenging year in terms of geopolitical situations, overstocking by the MNCs, and slightly better bad weather conditions in many parts of the world and also in India. But now the authorities have predicted normal monsoon, so we feel that Indian demand will be reasonably good and it will grow. And similarly, the geopolitical situations are getting slightly better, and we are getting better orders now for exports also.
Mr. Jain, just, you talked about how it has been a challenging year, and that's clearly showing in your numbers. Your EBITDA margins, I would say, crashed in a sense from 21% to 3% year on year. Net profit was also hit. Let me just talk about where you see margins improving to. You're saying demand will come in because monsoons are seeming fine in India, maybe more focus on rural India from the new government, etc. Where do you see EBITDA margins going back to?
Yeah, EBITDA margins, madam, it is really difficult to tell exactly where we are going ahead, but it will be better than what we are having present. We expect at least 17 to 20% of EBITDA margin in the coming quarters.
Okay, so you're going to jump from 3% back to 17 to 20%. And where will that boost come from? Because your volumes, which you were expecting to improve in Q4, also did not quite improve. So what is the reason that you're expecting those volumes to come back as well?
Volumes, we are getting good export orders now. Last year, two of our major volume products, the demand was very less. But this year we are getting good demand, and we have got good orders on hand for these products. And apart from this, we have slightly changed our product mix. And in this, we are getting good domestic demand for some of our products. So the volume would come from domestic as well as from exports.
The mix you're expecting split between domestic and exports in your volume mix for Q1 and for the next financial year?
Yeah, it will be, madam, about 50% export and 50% domestic market. All right, it has been like that only last year. It has slightly changed the revenue because the export market was down very much. But this year again, it is going to pick up, and we would be reaching around 50%.
Right. Mr. Jain, can you tell us a little bit more about your current installed capacity, the utilization levels? So from our understanding is that you budgeted a capital expenditure of about 110 crores in FY25. Can you tell us how this actually pans out for your overall capacity as well?
Yeah, our capacity, total production capacity is 24,200 metric tons per year. And our capacity utilization this year has been low, about 50%. But the coming year, it will increase to about 70 to 75%. And we have also adding new products. So that will augment the capacity by realigning our plant capacities for better product mix.
So where does this 110 crores of capital expenditure go towards? What areas?
Sir, in this, we are adding one intermediate complex in our existing plant at Sandila, and 60 crores we are spending in our subsidiary, 100% subsidiary by name Shalvi Specialties, which is coming up at Hamirpur. So we would be doing a capex this year of 60 crores, and we have planned a capex of about 400 crores in the coming 3 to 4 years at Sandila, at Hamirpur site.
And so you've also commissioned an intermediate plant towards backward integration. Now, this backward integration is towards fungicides primarily, am I correct? So what are your plans in this particular area?
Yeah, no, it has been our endeavor to reduce our dependency on Chinese imports. So we normally do all backward integration of our products, and it is a step in that direction. Last year also we did for one of the major products for a major herbicide, we did the backward integration and we started producing the intermediate in India. And this year we have added one more molecule in that direction for fungicide. And this intermediate normally has been imported in India. So we have started making this intermediate now in our plant.
All right.
This will reduce dependency on China.
Right. So, and final question from my end, sir, can you give us an outlook based on your revenues for the FY25 going in? This is, of course, assuming that the monsoons are normal or slightly above normal, then demand picks up. What's the way forward as far as revenues are concerned and your operating margins?
Revenues, sir, we are expecting revenues of increase of about 20-25% this year. And we expect to have the similar range in the coming years also. And profit, of course, as I told, is difficult to tell exactly as on today. But we feel that 17 to 20% EBITDA margins, we should be able to achieve comfortably.
Okay. All right, Mr. Jain, we leave it at that. Thank you so much for joining us and talking to us here on NDTV Profit.